closely on multiple ways to set up their investment strategies and giving great advice on not just business expenses, but for my husband and I also personal expenses and how to cut costs. And I thought it would be a great time for him to shed some light on different tips and ideas that he's created along the way to do that during this time, as well as what the government's putting up as far as he knows so far in terms of different benefits and subsidies for employers, self-employed and whatnot. So thank you for taking the time, Rob.
You're welcome. Thanks for the intro, Jamie Lee. So I think if you guys note, this has got a really nice chat function. If you have questions as you go along, you can feel free to flip a question on through the chat, and I'll try and address them as we go. Also, it's a small enough group. I just did one of these yesterday for a group, and I had about 48 people on, and it was a little too much to have people speaking up. If we stay this small, then we can just go ahead and speak. But if it grows, then the chat's a nice way to do it if you want to. I'm going to try and address just in general some basic financial planning concepts, but really I'm going to get more into depth into what the government has done, what benefits and aid packages are available. And this is a very fluid situation. The government has been making changes to this on a daily basis since this all began in earnest probably 2 weeks ago. So it's kind of day to day as far as the benefits that are available. They're adjusting, changing. They're starting to take shape now into a much more definite package. So to start, I mean, this is a very, very difficult time financially. And so what my general advice to everybody, every one of my clients is be cash strong as much as you can right now. So cash is really important. So don't make any installment payments to the government of any kind. Hold off on distributing money as much as you can. So if you have, there are some different municipal programs that are in place in the city of Toronto. There's also a number of different municipalities that are doing similar things where they're allowing us to defer property taxes and things like that. And I would recommend that you do that. Keep a detailed ledger if you can. Keep an Excel spreadsheet or something like that where you keep track of all the payments that you have deferred. But it is important to keep as much cash as you can, because we don't know right now. Best case scenario, this is going to end in June 1st. We're back to semi-normal, but we've all probably heard that there are some worst case scenarios that could see it going into the fall potentially. And if that happens, then we really need to be strong financially to be able to weather the storm. The other thing is lines of credit, available debt facilities that you have, just have them at your ready as best you can. There's a couple of different things. I'm going to share my screen a number of times. Hopefully it looks like everybody's joined by computer, which is good. Sometimes people call into these things, and when I share my screen, it makes it difficult for them to follow, but I think we should all be good here. Okay. So I'm going to share my screen. There's a number of different websites that the government has put out that are quite useful, and this is one of them. So this is just the COVID-19 support page for the Canada Revenue Agency, and it has a number of different things. And the first thing that it says for everybody is to register on CRA's My Account as quickly as you can. So and make sure you don't put off. One of the things you don't want to do, we just talked about the idea of holding on to your cash. That doesn't mean not filing your taxes. You do have to file your taxes in order to access a lot of the benefits that the government has put in place. So get those tax returns put together. Use your time in your homes right now where you've got excess time on your hands. Put your information together and get it to your accountant so that you can get your tax returns filed on a timely basis. The first payments that are going to start to come out are the enhanced benefits for HST and child benefits. So if any of you have children, And sometimes when I change my screen, I have to reshare it. So I'm just going to do that to flip back. This is the eligibility for the response benefit. So this is the $2,000 per month benefit that they've talked about. They're calling it the CERB, so the Canada Emergency Response Benefit. This is going to be applicable for every real estate agent, incorporated or not. So if you have an admin co and maybe even a sub brokerage, this is just as applicable to you as it is to the sole practitioner that had GCI of $80,000 last year. So this Canada Emergency Response Benefit is for everybody in Canada. You can see here, every available worker that resided in Canada at least 15 years old, stopped working because of COVID-19, and had income of at least $5,000 in 2019. So even our brand new agents that sold one property in 2019, this is for you, and it'll provide a benefit of up to $2,000 per month. You can see there's all sorts of links on this page, and I'll send an email to Jamie Lee after this, and she can distribute it, or to Heather, and we can distribute it throughout all of the brokerages that you guys are involved with. So we can make sure that everybody has access to this. But in order to do this, in order to use it, you have to have a My Account set up with the Canada Revenue Agency. So My Account is simply an access that when you go to the CRA website, it allows you to log in, look at your RSP contribution room, look at how many installments you've made year to date, that kind of thing. Some people probably have it, some people don't. In order to apply for the Canada Emergency Response Benefit, you have to have a My Account set up. So it's not very difficult to do that. You're simply going to go, and again, I will share this screen. And if you go to your Google and you type in CRA, well, I think that's all you need to do. I'm going to take you that way. You're just going to go to the Canada Revenue Agency website, and you are going to sign into a CRA account. And you'll see here that it gives an option for My Account, My Business Account, and Represent a Client. You're going to go to My Account, and see down here where you don't want to go option 1, which is using a sign-in partner. This is if you only want to make a payment to them. You don't want to do that. You have to actually set up a My Account. So you're going to go down to option 2, which is using a CRA user ID and a password, and you're going to click the CRA register if you haven't already got this set up. Okay, that'll take you through a process. You're going to have your social insurance number handy. You're going to have probably your last year's tax return available as well. And that will take you through a process that will get you ready to be able to apply for the Canada Emergency Response Benefit. And that's the one that everybody here is going to be able to benefit from. In addition to the Canada Emergency Response Benefit, we've also got the, right here, we'll do this one. So this is the additional support for Canadian businesses, and oh, sorry, this is a different one, but this is important too. So HST filing deadlines all got pushed back to June 30th. So HST filing and HST remittances all got pushed back to June 30th, 2020. So if you're an annual filer, which most HST accounts for our real estate community are, you don't have to file that until June 30th now. So that's important. I do want to find my enhanced HST credit. So there's 2 things that are coming out that are going to be also beneficial based on the filing of your tax return. One is the enhanced HST credit. So right now, a lot of you probably did not get the HST credit in 2019 or earlier because it's a low income credit. It's a credit that's available for households with income under $50,000. If you have household income above that, you would have exempted out of it. Same thing as the Trillium benefit. The Trillium benefit's an Ontario credit or refundable credit that's paid out to low income individuals based on their tax filings. But with the emergency that is currently ongoing, the enhanced HST credit is going to be paid out in the amount of $400 per individual or $600 per family, starting in May, based on the filing of your tax return. So you have to file your tax return. So for a lot of you, that may be either $400 or $600 of additional cash flow that will come in once you file your 2019 tax return. In addition to that, you've got the child benefit. So they've given an enhanced child benefit, which is applicable only during these COVID-19 days. So, you know, it may be for 2 months, 3 months, 4 months, but it's $300 per child 18 years or younger. And so that again is contingent on filing a tax return. So if you take an average middle-aged family where you've got 2 kids, 1 teenager and 1 underneath that 10, 11 years old, they're potentially going to be able to get $600 for the enhanced HST credit and another $600 for the child credit. So that's $1,200 a month right there, just in additional non-taxable credits that they'll be getting. And then on top of that, if both husband and wife earned $5,000 in the previous year, then they would be able to qualify for the Canada Emergency Response Benefit, which would provide you with another $2,000 each. So there's an average family of 4 right there is going to be able to get in the ballpark of $5,200 a month starting in May from emergency responses. And I know that that's probably not sufficient for a lot of families if you're used to living on a lot more than that. And so this is where the cost cutting and any measure you can. So I've got a client, a tenant and a client that is upstairs in my accounting practice on the 3rd floor of my building. And they're a leasing business. So they lease all sorts of things from vehicles to equipment for businesses. And I had a chat with them, and they have just been inundated with borrowers and lessees contacting them saying that they're not going to be able to make payments. In this situation, you have that kind of flexibility. So if you have obligations with, you know, vehicle leases or other things, and they're stretching you too far during these times, get on the phone and communicate. A lot of the businesses are making exceptions and are flexible. If nothing else, they can defer the payment or extend the lease to be able to allow you to have a little bit more flexibility on your payment terms. So make sure that you communicate well. Same thing with rent. You guys probably have clients that you've serviced that are landlords and have bought a bunch of rental properties. And this is a time where landlords need to be flexible and tenants need to be good communicators. I think generally speaking, if they communicate with their landlord and ask for an exception, ask for a deferral, ask for you know, a reduction in their pay, in the amount that they pay, then this is a time when it'll be granted. So those are the types of things that you can do in order to reduce your current cash flow. Another thing, of course, is the bank. Contact the bank for your personal mortgages and talk to them about the possibility of payment deferrals. So that's something that right now is supposed to be on the table. I've not heard good things from a lot of people about this, but personally, we were able to contact our bank and get a 6-month interest-only period on our payments, just in case. And like I said, so this is the kind of planning. You go cash strong, so you reduce every payment that you possibly can for as long as you can to the lowest possible amount. I think that's the right strategy right now. You do that in order to make sure that you can survive this as long as it lasts. Because this, you know, again, best case scenario, June 1st, we're back to selling houses and doing our regular day-to-day activities. But there's a possibility if this goes to September, if it goes to December, that we need to be ready to weather this for the long haul. And I know that that's a scary concept for a lot of people, but good communication is super important. So communicate with your bank, communicate with your car company that you leased from, whoever it is that you have financial obligations with, just talk to them and ask them what the best they can do for you is. And then of course, just living in your home all the time is a lot cheaper than being out on the road. So a lot of people are spending less on gas. They're spending less on eating out. So this kind of lifestyle that we're forced into right now is conducive to spending a little bit less. And that is a little bit of a help for some people. Any questions specifically about the benefits that are available? So for you guys, I'll just do a quick recap. I see some questions posted on the chat, so I'll address them right now. But just to recap, the benefits that are available are, number one, the Canada Emergency Response Benefit, the CERB they're calling it. So CERB is the acronym. And the CERB is the $2,000 per month benefit that is it's equivalent to employment insurance for people that have not paid into employment insurance, which is all of us. That CERB is going to be taxable income. You need to be aware of that. But don't, for now, don't worry about the tax implications to it. The other benefits are the enhanced HST and the enhanced child benefits, which we talked about, which can also start as early as May. The application for the CERB is going to be available Monday, May the 6th for people born January, February, or March. For people that are born April, May, or June, it will be April 7th, and so on. So they split it up into 4 days. So Monday, Tuesday, Wednesday, Thursday next week, the application system for the Canada Emergency Response Benefit is going to be available. So being a May birthday, I would be able to apply for the CERB if I needed to on Tuesday, April the 7th. You need to look at that yourself. And then in order to apply for it, you have to have your My account set up with the Canada Revenue Agency. Okay, I'm going to address a couple of questions here. So from Deb, will this benefit be clawed back on the taxes in 2002 Canada Emergency Response Benefit? I don't believe that it will. They have said nothing about that. Employment insurance has a portion that can be clawed back, a repayable portion. You'll often see if you've ever had a T4E, which is the T4 slip that reports EI benefits, you'll see that there's a box right beside the income box that shows a repayment percentage, and it can go as high as 30% with EI. They have said nothing about that with the CERB. So Deb, I would assume the answer to that is no. Okay. Next question from, Deb, did you have a follow-up to that, or did I see a hand go up? Oh, good. Okay, got it. Dan, non-taxable credits so won't be clawed back. Yes, you're correct. So the credits, the child benefit and the HST credit are non-taxable credits, and there will be no clawback of those. I'm not sure how long these will go for. Just so you're aware, this could, I would expect the child benefit and the HST credit to go for the full year is my expectation. I don't think that if we're, not socially distancing anymore in July, I don't think that they'll take it away, because the economic impact that people are going to feel is going to last for a lot longer than just 2 or 3 months if this goes, for 2 or 3 months. All right, Michael Schmidt has said, based on that advice, do you recommend not paying off credit cards at this point, even at the cost of interest? That's a really good question, Michael. I would say it really depends on the rate of interest, and it depends on how dire your situation is. So if you're in a position right now where you have some excess and some supplies, I would suggest that you pay off your credit cards. Generally speaking, credit cards range from 19 to 29% interest rates, and they're compounded very frequently. They're compounded monthly. So I think I would prefer, especially if you had available other lines of credit. Let's say you don't want to use your cash. I would suggest thinking about using an available line of credit that has a much lower rate of interest. We know in the last month, we've had 3 different rate decreases by the Bank of Canada, which have resulted in Canadian banks decreasing their prime lending rates, which I now believe are 2.25 or 2.45. It's something like that. We've had 1.25. So what were we? We were 3.95, weren't we? I think we were 3.95 before our prime rate was. And so we should be down to 2.6, something like that, 2.7. For our prime rate. So that's pretty good. So if you have a line of credit at prime plus a half and you've got some credit cards and you don't want to use your cash, then, although probably the smartest thing is to use your cash, pay it off, and then if you need money in the future, if you need that cash reserve, you use your line of credit, right? If we're really trying to be as smart as we can with our interests. The banks are not going to take away lines of credit. That's something that the government's made very clear. So they are not going to go and say, hey, we think you just lost your job. We're going to take away your home equity line of credit or your unsecured line of credit. So you should be pretty comfortable knowing that if you've got an available $30,000 line of credit right now, it will be available 2 months from now as well. Okay. Tanya has got a question. Is there a max on income that you make in 2020 when they start clawing back if you've received the CERB or an additional CCB during COVID-19? What if you're continuing to get rental income, but your regular realtor income is impacted? Do you still qualify? Very good question. So the rental income is considered passive income, and it's not part of the discussion with respect to CERB. So they are not going to not pay you a CERB benefit, a Canadian Emergency Response benefit, just because you've got rental income. It's quite possible that just because you received rental income on April the 1st, it is quite possible that you may not receive that same rental income on May the 1st or June the 1st, right? I think everybody can understand that, you know, as tenants continue to be impacted by being unemployed, they will have, you know, not as much income. I've got 5 tenants, 5 rental properties, and I received all 5 full payments yesterday, and I was quite happy with that. We'll see if that luck continues, but it's quite likely that 2 out of those 5 are not going to make their May, and then 3 out of the 5 are not going to make their June payment. I wouldn't be surprised at all. So just because you're getting that income now, I don't think that the government is going to not give you the CERB. And I believe that there is no clawback on the CERB. Again, based on information that we have today, there may be new information that comes out later today or tomorrow that tells us something different. Good questions though. Anything else? There's all sorts of, I'm sure, concerns and anxieties that we're feeling, and a lot of them are financially related. A lot of them are health related, starting to get a little bit more real with respect to what we're seeing in Toronto. Laura, hi Laura. I may have missed this. CERB, yes, does there have to be a change in income to receive it? The answer is yes. So CERB is the CERB, the Canada Emergency Response Benefit. I'm not sure when you jumped on, but the CERB, the rule for it is that you have to have made $5,000 last year. You have to have been economically impacted, meaning that you've lost your employment or your self-employment source of income. Okay, so if you've got a bunch of closings in March and a few more closings in April, you may not be eligible to apply for the CERB until the month after those closings take place. That's a very good question. For variable mortgages, is it best to change it to a fixed now, or should we wait 4 years left? Good question. One thing that hasn't happened is the mortgage rates haven't necessarily moved lockstep with the lower variable rates. So we haven't seen an immediate drop in our 5-year fixed mortgage rates just because the Bank of Canada dropped and the Canadian bank prime rates dropped. So hopefully that's something that we will see within the next little while. So I would actually wait. I think that if you're looking at potentially breaking out of you know, one mortgage to get into another, I think the rates will come down a little bit more on the mortgage, fixed mortgage rates. But it's good thinking. I mean, I think it's going to be a good time to fix within. They're talking about a very quick recovery. You'll keep on hearing the politicians talking about that, the recovery. They're hoping all of these measures are going to allow for a quick recovery. Oftentimes that's not the case, right? When you have a major recession or depression, it can quite often take years for an economy to recover and to get back to where it was. The measures that they're doing right now with respect to providing wage subsidies for employers and continuing to allow you know, people that are unemployed to have income so that they can make their rent payments, so that they can make mortgage payments. Those are the types of things that, you know, hopefully will allow the entire financial system to stay afloat instead of dropping and then having to take years to recover. So I think waiting a little bit on that mortgage rate, Salima, is probably the right thing to do. All right, we got a few more questions. So what is the waiting time after last received income from closing to apply for CERB? It's a good question. They've given very specific timelines for the wage subsidy. So we've all heard about the 75% wage subsidy and the 10% wage subsidy. They've given some pretty good detail on that. They haven't given it for the CERB. All that they have said, in fact, I'll go back. I'll put this up again. Okay, I'm going to share my screen. So this is the landing page for the Canada Emergency Response Benefit. Shows you how to apply. Again, the birth dates, the January to March is April 6th, July to September is April 8th, and so on. After April 8th, you can apply anytime. Okay, so if you're a February birthday and you missed April 6th, I would expect the system to be kind of not great. It's going to be overloaded. So it could be hard to get on. It could be hard to be able to actually make the application. If you miss it, don't worry, because they're backdating the payments to March 15th. But here's the eligibility. So to answer that question, the only definitions that they give us is that you have to have stopped working because of COVID-19. You have to have made at least $5,000 in 2019 or the 12 months prior to the date of the application. And you are or expected to be without employment or self-employment income for at least 14 days. So with that, I think that last point, you have to expect to be without self-employment income for at least 14 days. That's probably the answer. There's no waiting period. As soon as your last closing comes in and you have nothing else on the calendar, that's probably the day that you should go in and apply for the CERB.
The other thing I wanted to mention, Rob, is if, like the UK, Canada follows suit and real estate becomes a non-essential service alongside any of the pieces of that puzzle, and closings cannot happen if they do close up, our ability to close and pay out deals, would then the agents be capable to apply for the CERB?
Definitely.
Okay.
Yeah. Definitely, yeah. If it's made a non-essential service, and we're actually supposed to hear something either tonight, tomorrow, or over the weekend. So the provincial government is supposed to update their list of essential services. And if real estate, it's actually been widely speculated. I've heard that quite a few times because it was done in the UK. The US is also looking at their list of essential services. If that happens, then all of you are going to immediately be able to go on, because that will be at least a 2-week, right? And that's the definition for 14 days. So you have to have an expectation that there will be no income for 14 days from self-employment sources. So that means you can still be collecting rental income, right? You can still be collecting rental income. You can even still be making interest income on a GIC investment. But you have to have an expectation that there will be no self-employment income. Okay, a couple more questions here. We've got, we just finished Tanya's question on, or Tanya, is it Tanya or Tanya? Tanya? Laura has got another question.
It's Tanya.
Pardon me?
Tanya.
Tanya, thanks Tanya. Thanks for doing this. Incorporation, do you think it'll still happen this year? Yeah, I've got a couple of emails I could share. I just heard back yesterday from Rico. Come on. Let's see if I can find it. I just heard back from Rico, and they gave me an answer. I had asked a question. I'm not sure if everybody knows, but the bill received royal assent on March the 4th. And that should mean that it should move very quickly into law. Unfortunately, the Real Estate Council of Ontario, here it is. Here, I can share. This is from LK Client Services Department at the Real Estate Council. So right here says, dear Rob, so I asked a question, can you please confirm that Bill 145 did in fact pass into law March 4th, and what the expectations are for a timeline for RICO to be ready to register personal real estate corporations for its members? And they responded back, thank you, you're correct. It did receive royal assent, but the government hasn't proclaimed Bill 145. So there's a number of steps. So there's 3 different readings that a bill goes through. And those then result in a vote. It then receives royal assent, which means that it has been approved, but then it also has to be declared or proclaimed. And that's the last step. It's done. So you guys are getting it. It's just a question of when. And unfortunately, with COVID-19 going on, if Parliament does get together, they are not talking about whether you can have a corporation. So unfortunately, they will be talking about emergency measures that need to be put in place during this crazy time. So with that said, and given how close we are to summertime when they normally prorogue Parliament, my guess is this is something in the fall. And so I think 2020 is a bit of a write-off because you guys don't normally have, stellar October, November, Decembers. I would expect that, most people that are planning to do this, which really should be a lot of you, if you've got GCI, that is producing more net income than you need to live off of, then a personal real estate corporation is probably a really good idea. It's something you need to look at individually with your tax advisor, but it's going to affect a lot of clients. When years ago, when this whole idea of a sub broker first came out, like we were saying, this doesn't affect hardly anybody. Like there's very few people that need a sub brokerage, just the administrative clumsiness of it, the cost of it. But the personal real estate corporation, cheap to set up, cheap to administer, super effective from a tax standpoint. So a lot of you are going to be looking at this. The second part of it, I didn't, maybe I left it up, some of you saw it, but she said in the next little 1-sentence paragraph, unfortunately, I do not have any further updates for you at this time. We'll continue to share information as it becomes available. So we don't really know when RICO, because the steps are going to be like this. They're going to have the bill proclaimed, which means it's now officially in law and enacted. Then RICO, TREB, ORIA, all these different organizations are going to have to come up with their internal administrative process to allow for the registration of personal real estate corporations, which again will take some time, which is why I'm saying it's probably a very, very realistic timeline to hope for. You can be set up and ready to go and registered January 1, 2021. It's probably a realistic guess. Again, just because the Parliament's not going to be in session. They usually come back in like mid-September, something like that. It'll get proclaimed at some point, and then after it gets proclaimed, RICO and TREB and all the different bodies have to then come up with the process of how to register it, what the naming procedures are going to be, all that kind of stuff. Good question. All right, let's go on to the next. So Dan has a question. Aren't mortgage rates affected by risk? I would think this may be as low as banks are comfortable going. Quite possible. They're also affected by demand. And so if people are not buying houses, you may see that the mortgage rates are going to drop a little bit just simply to encourage and spur on some buying. But there's all sorts of effects on interest rates. And, the government is not the least of these. The central bank is the main thing that controls the rates. But the banks, I don't think the risk of a first mortgage is going to increase tremendously once this is over. And I think the banks won't have a massive risk adjustment. So I wouldn't worry too much about that being the case, but time will tell. Another question from Michael: can you address benefits available to those who are incorporated? Does the wage subsidy apply to those that are incorporated but basically an individual or has a single employee, if this applies to others? So good question, and thanks for bringing it up, Michael. So the wage subsidy, so there's 2 wage subsidies. First of all, there's the 10% and then there's the 75%. The 75% applies to corporations that have had a 30% or greater decrease in revenue, which is probably going to be most of you. It's done on a month-over-month basis, so you're going to compare March 2020 to March 2019, April 2020 to April 2019. If you're newly incorporated, you can compare it to the previous month, so you can compare March to February or April to March. The wage subsidy itself only applies, obviously, if you're continuing to employ employees. So if you have an administrative staff, if you yourself are receiving a T4, if you're paying yourself a salary from your corporation, then that wage is in fact eligible. So they have not restricted the wage subsidy from the owner's wages. Again, it stops them from going out and laying people off. It stops the owner from going out and applying for the CERB themselves. So the wage subsidy is something that's an option, but it is quite a bit more complicated, and there's very little detail on it so far. We do know that there's going to be a 6-week delay in being able to apply for, not apply for, but receive the wage subsidy. So an employee is going to have to pay their employees in April, and sometime by the middle or end of May, they will receive the wage subsidy. So from a cash flow perspective, this isn't for businesses that have ground to a halt. So if a business has ground to a halt, you're gonna want to lay your employees off, and you're gonna want to get the CERB going for yourself. If your business continues to make money, continues to be active, but it is affected by 30, 40, 50% decrease, then you can afford to keep your employees on maybe at a reduced rate, and the wage subsidy kicks in to help the employer keep those employees on their payroll. And that's the idea of the wage benefit. There's lots of good information that's starting to come out. The CRA has a good page that has, here, I'll share this really quickly. You can look at it. So here's the site, frequently asked questions, temporary wage subsidy for employers. And this gives, pretty much everything for it. It doesn't have to be, just so you know too, it does not have to be a corporation. So it can be an individual that has a payroll account. So each of you, if you have an administrative staff and you want to keep them on payroll, the wage subsidy could apply to you as well. Okay, so it applies to individuals, partnerships, and corporations. You have to have a pre-existing business account number prior to March 18th, and you have to pay salaries, wages, and bonuses to eligible employees. And eligible employees, anybody that's employed in Canada. The subsidy is this is the 10% one, but it goes up to 75% if you qualify. And it can be, the 10% one is for employees. It's up to $1,375 per employee. But there's good information out there. And if you have specific questions, if anybody does, you can feel free to contact me at my office here. Maybe Jamie, we can float my contact information out. All right, Tanya has got a question. Follow up to the last question. Say you receive your last income and then apply for the CERB and start receiving it, and then again make income from new business. Does the clock reset and you stop getting CERB? Is there a minimum amount of income? Example, I have some rentals on the market that will likely take a while to rent, but the commission is going to be low. Yeah, I believe with the CERB, you are expected to make no income. But there's a whole question and answer. There's a whole question and answer page on this website. So I'm going to send that out. So so there are questions with respect to that, Tanya. There's questions, if I would be entitled to less than 500 per week, will I get that with the CERB? Yeah, that's a good question. And again, this is new stuff, so we're just trying to learn it as we go. I think that if you had, a contract to rent some apartments, I would go ahead and apply for that CERB, and I would just declare it as you go. You have to go back in once a month under the Canada Emergency Response Benefit Program, and you have to reattest that the situation that you were originally attested to is still the case, is still correct. And there may be some information there. Did you earn any income during this period? If so, perhaps it reduces your next month's CERB. If you made a $500 commission or a $1,000 commission, maybe it reduces it by a little bit. Again, we don't know those exact details yet.
I had a follow-up question, Tanya here.
Sure.
Rob.
Yeah.
Yeah. So what you're saying essentially is that if say you've made your last income a few days ago, then you're saying apply in 2 weeks if you're expecting to receive your next paycheck in 2 or 3 months,
Yes, that's correct.
right?
Yeah, so you have to have an expectation.
I have a long closing for something that I expect to get in a few months, so I should still apply.
Definitely.
Okay.
Yes.
Thank
So just so everyone's clear, the expectation is you have to expect to not get self-employment income for a period of 14 days. Now, this is completely contrary to the way you guys live your lifestyle. Real estate agents go closing to closing, and sometimes there may only be 3 or 4 in a year. And in fact, for some of you, 3 or 4 in a year may be a good thing. So you're used to having 14 days where you don't have any income, but that is the rule here. And so if you have 14 days with no expectation of self-employment income, then I would suggest that you can apply for it.
And Rob, is it retroactive once you apply, or is it just going forward? Okay.
Yeah, it's retroactive. Yeah.
Okay. Thanks.
Yeah. I'm going to see if I can find on here where it's retroactive to. But I think it's retroactive to March 18th is the date that's in my head. One second. Yeah, not seeing that, but there is a retroactive component to it. Thanks, Tanya. Salima, for incorporated, do you need to be on payroll, or can it be T4 that you create at the end of the year? Is that the same? It's a good question. To be doing payroll correctly, you have to have source deductions being paid on a monthly basis, right? So you can create a T4 at the end of the year and then pay a penalty for not remitting regularly. So yeah, I suppose you could say I was on T4 and I just didn't remit. But ideally, this is for people that are on a T4 that are taking a monthly wage from their business and are remitting each month in the subsequent month. There's a lot of businesses, though, if you're incorporated, there's a lot of corporations where business owners do not draw a salary because their income is periodic, just like a lot of your income is. And in those cases, a lot of times the owners of those types of corporations draw a dividend on occasion. Whenever there's money, they grab money, and the dividend is easier because there's less reporting. There's just one T5 slip per year. A lot of businesses do that. And because of that, it puts us in an awkward position because they've said that the CERB is for people that received employment or self-employment income or maternity or paternity benefits. They did not say dividends from a small business corporation. So I actually have a question into the Canada Revenue Agency asking for clarification on that, and I doubt that I'll get any kind of timely answer on it. We're taking a position. Oh, and I just got a response back from a tax lawyer that I've worked with. You can read it in real time with me and see what he says. This is with respect to dividends. So a little few pleasantries at the start. We won't know until we see the draft legislation, but I expect they won't include those who have taken their remuneration through dividends. Although it seems unfair from a tax policy point of view, it makes sense. Dividends won't qualify for RSP contributions or even for determining how much disability income insurance one can obtain. We've seen from Bill C-13, which is the initial 10% wage subsidy, apparently that will still be in place for those who may not qualify for the 75%. Yeah, so again, sorry, can't be much help. There's just so much that we don't know right now. And dividends, you know, in retrospect, may not have been the best decision if we were planning for a pandemic like this to hit us and trying to get all of the benefits that the government's going to give out. Most of the benefits are going to be based on employment income and self-employment income that you received. Okay, so that was Salima's question. Michael, if Salima does that annually, presumably she did it at the end of 2019 or at least 2018 in that case. And you're right. Yeah, Michael, I agree with you. So if Salima, if you did file a T4 for 2019 in February, which is when you should have done that, then you should be good because you had a T4. So that's correct. All right. Any other questions, thoughts? There's so much going on here. You know, my thoughts honestly are with every small business owner. It's a very stressful time to be in a situation like we're in, and you know, the health is number one, the finances are number two, and a close number two as well, because it's pretty closely tied to our health. Jamie, you want to, does anybody have any more final questions? I'm happy to stay on. I'm good for a little while longer.
I think my final question is just from a business owner standpoint on trying to get landlords who are commercial landlords to assist in any kind of % off of rent during this time or anything like that. Have you heard anything that the government or local municipalities are trying to push to get assistance? We've asked both our landlord in Barrie as well as Toronto, and they're like, absolutely not. And in fact, our Toronto location slapped us with an extra bill for something that I guess it was a rate hike that they forgot to bill us on. So we got a surprise double whammy bill this month in Toronto, and he's being absolutely non-negotiable on anything.
Yeah, there's nothing right now. There's talk to try. So I just sent my contact information. It got sent to Deb privately. I will send it to everybody in a second. So I didn't realize it was set to her privately. Yeah, there's nothing right now that is requiring landlords, either commercial or residential, to not collect rent, to not charge major penalties, other things for missed rent payments. There is legislation in Ontario to stop residential landlords from evicting tenants. So I think that there's talk right now about potentially expanding that to a commercial setting, so that the landlords are required to at least not evict. But there's been pretty strong language. I remember, I think it was yesterday or the day before, listening to the Doug Ford press conference, and they were basically saying, when asked, is there going to be legislation to enforce that, he said, no, there's not right now, but it would be a pretty heartless landlord that would evict anybody at a time like this. Unfortunately, we know that a lot of landlords are kind of heartless. So, you know, speaking as a landlord myself, like, I'm not going to, we've already decided we're going to be lenient. Like I said, I was lucky that we collected 5 out of 5 full rents on April 1st, but we're ready to potentially forgive or at least defer some rents as time moves forward. This is a pretty tough situation. So Jamie, I'm sorry to hear that. That sucks. And there's no legislation that I know about. Okay, Deb just shared my contact information. So thank you, Deb. I appreciate that. So my phone number, email, feel free to reach out. We're doing our best to work from home. We've got 6 people in the office right now and about 25 working from home remotely. Good chance if you reach out to me, if I can't answer it quickly, I'm going to flip it over to one of my staff, who are, I got a whole bunch of chartered accountants and staff accountants that are working from home and are not overly busy right now. So I'm going crazy with the number of calls and emails that I'm getting from clients asking questions about all of what we're talking about right now. Unfortunately, the amount of work that's flowed in over the last 2 weeks is a trickle compared to the tidal wave that usually comes at this time of year for us. And so I've got a lot of accountants that would love to pay you special attention and respond to your questions. So I may shoot your question over to someone else. Hope that's okay.
Wonderful. Thank you so much for spending an hour with us.
You're welcome.
And if it's easy for you, you can have access to this live recording if it covers a lot of what people are asking you, and you can send them a video and say, here,
Sure.
watch this. So
yeah, watch this. Okay.
I'll
Yeah,
get Carlos to send that to you.
Good. I appreciate that. Thanks. And good questions, everybody. I appreciate it.
All right.
That's great. And
Okay.
make sure if you have some time tonight, you check out our Staying Calm and Resourceful in Difficult Times with wellness expert Wendy Vineyard. She'll be on from 7 to 8 on Zoom.